They didn't use.
What's going on, everybody?
What is going on? What a day, what a day. What a good Thursday to be doing this, right?
Yeah, this is good stuff.
What's going on, Austin? What's on, David? What's going on, Sel? How's everybody doing? If you guys are able to write in the chat, please let me know, making sure it's fully working and operational. I did give everybody access, so if you could just put hi, hello, where are you from, anything like that, letting us know that's working, that'd be fantastic. St. Louis, awesome.
Beautiful. We'll give it another 2-3 minutes, right?
Yep. Yeah, I am definitely excited for this. I think this is a class that a lot of people don't really know about when it comes to like your benefits with your VA loan. But I think, Nestor, I know you use your VA loan. Josh, you've done a lot of stuff in real estate. I've used my VA loan a few times across the country, really, while I was in. So I think all of our experience, coming together, this is really why we brought this class for people that are watching, kind of like, who are these guys? We've all leveraged our VA loans before, and this is really going to give us, we have the insight to help everybody achieve their goals when it comes to using your VA loan, and you're going to get actual information that you will not use to commit mortgage fraud. These are the right ways to do everything. So,
yes, sir.
Awesome. David, thanks for joining us. Austin, thanks for joining us. We'll give it about just another minute, and then we'll kick this thing off.
Yeah, we can always record it and send it over.
Of course, we should be good on recording now.
Intimate group.
Yeah. So, quick question in the group chat: has anyone used your VA loan before? Or is everybody a first-time home buyer? Any experience with your VA loan? Just trying to gauge the audience's experience level when it comes to using your VA home loan. Nope. Okay. Nice. Thanks for joining us. Josh is awesome. He'll take care of you.
Appreciate it.
Okay. Well, 6:03, Nestor, I'd say you're good to go. Kick off.
Yeah. All right. So yeah, good evening, everyone. Thank you guys for joining today's webinar. Super excited. Zach, Josh, and I immediately had synergy, and we're on the same mission. We're here to help veterans get tools and resources to navigate different ventures. They're mostly in the mortgage world, and I'll let them introduce themselves in a little bit. But I wanted to introduce myself first and what I got going on. Who am I? What's my program about? So we can just dive right in. Okay, so a little bit about me. I am an Army vet. I served overseas combat deployment, Operation Enduring Freedom in 2011. I got out of the military, reintegrated back in civilian life, did police work for about 7 years of service here in my hometown, New York City. In 2019, I opened up my first business, which was selling on the Amazon platform, where I was able to generate multiple 6 and 7 figures in the online space. And I did very well. and I then started falling in love with more so the consulting side. So I did Amazon consulting, helping in that space for a little while. But like I said, I fell in love with more my my passion for service evolved into entrepreneurship and mentorship, of where in 2022 I opened up the doors and created a program more in the business and life consulting space, online business education, and it went very well. Had some great students in the last 18 months, and now I have niched down, rebranded myself, and on a new mission. And GRI University introduction here is an online, excuse me, an online business education program helping veterans continue to serve as entrepreneurs in civilian life. And that is my new mission in life, and I'm super excited about it. But before anybody gets involved in any type of business, there are some prerequisites to get involved in any business. So if you're on this call, you're likely a veteran, and thank you for your service. So we are here at home base, aspiring entrepreneur as a veteran, and one of the first steps we have to do before we join any business venture is to optimize our credit profiles. And doing so, we get to get the best loans and the best finances out there. So along with the VA loan, they are going to be rates, and putting yourself in a position to get the best rates is the best avenue. So optimizing the credit profiles will be step one. And if you need any type of credit repair or restoration, I do free consultations. So you can reach out to me. I'll give you my contact information at the end of the call. So once we optimize the credit profile, we then have to get you funding. And upon joining GRI University, you have access to my business partners, which will get you up to $150,000 in funding with no documents and no statements, with a minimum score of 660. So with that funding and capital, you need to reinvest that money into self-education and into an investment vehicle that can make you cash flow. And that is the point of being involved in any business, is to create cash flow. So we can create cash flow different ways: products and services, e-commerce, and like today's topic of conversation is going to be all about VA quadplex and house hacking, and using that strategy to create you cash flow. But before we get involved in hearing Zach and Josh educate us on that, I wanted to give you a little bit more insight on my program. So once we have the baseline of these three things here, my program is a business and life coaching program, and this is the format and the community I'm building. So this community is going to be veterans, aspiring entrepreneurs looking to transition their leadership skills into entrepreneurship. And I have developed this program to help you get the tools and resources to navigate online in the financial in the online space. So this is the program a little bit. I'm not going to dive too much into it, but this is the outline of the program, of where, again, we help you with the credit optimization, creative funding options, business and tax strategies, different types of investment opportunities, and online business development, where we help you structure, set up business credit development, online business education when it comes to acquiring cold leads, marketing and sales strategies, systems, operations, SOPs, and outsourcing. That's really what made me be able to quantum leap in business, is to be able to systemize and organize yourself to delegate and outsource that, so you could be more in a leadership position. And no matter what business you want to be in, you want to get a position that you are in that space of leadership. So without further ado, I wanted to introduce our guest speakers. And if you stay tuned to the end, I have a special offer for you guys for joining today's webinar. So stay tuned to the end, and we'll discuss those opportunities. So without further ado, Zach and Josh, you guys can hear me?
Yep, we gotcha. All right. Well, I'll just introduce myself real quick, since Josh will take it from here. So I am a Army veteran, I am a dad, and I am a mortgage broker. A little bit about me: I have used my VA loan multiple times. We're going to dive into that a little bit more on how to leverage it. Of course, that's why everyone's here. But I served 9 years in the Army as an infantry guy, 11 Bravo, all that good stuff. This is a picture of me on my first deployment, 2014. Crazy to think it's been 10 years ago. I know some of us, if we deployed, it's like, holy crap, it feels like it was yesterday. But that is a little bit about me. Josh, go ahead and take it away.
Yeah, so same thing for me. I'm an Army veteran, mortgage broker, and I've been an investor for a while. Zach and I actually have a pretty interesting story of how we met and how we teamed up. We actually started off as enemies. He was my first team leader, and I'm sure you can imagine, as a brand new private, coming to your infantry unit, that was not the best foot to start on. But we've done quite a bit of work together now, and put our brains together, and think we're going to give you guys a great class. Zach, I think you have it. All right, so there's three main types of a VA loan. You can use it to purchase, which obviously you can just buy a house. You can do a cash out refinance on an existing loan. So if you have equity in a property, you can do a cash out refinance, get a new rate, and pull out some of that equity. And then you can do an interest rate reduction refinance loan, which what we call in the business is an EARL. And this is just where you take an existing loan and you're going to refinance it into a new rate. All right, so the history of the VA loan. It was introduced in 1944 to give veterans access to homes. So the government realized that veterans need something for their service, right? So they opened this program to help us be able to buy homes and start businesses. Did not become eligible for reserves and National Guard members till 1992. And despite a great deal of confusion and misunderstanding, the federal government does not make direct loans under the act. So it's all funded by investors. So there's a lot of myths associated with the VA loan, and we come across these all the time. And we're kind of on a mission to get rid of a lot of these. So for one, there are no fees associated with the VA loan. Buyers are always responsible for paying their closing costs. Right now is a great time in the market because you can still get seller concessions. So that can help you mitigate some of that cost and potentially get a home with no out-of-pocket money. Another myth, the VA loan can only be used one time. You can use your VA loan multiple times. Zach currently owns multiple homes within his VA loan and still has remaining entitlement. So he could use it again, zero down. You can only own one home at a time. Again, that goes back to my example with Zach. You could buy multiple until you run out of your entitlement. The VA loan can be used for investment properties. So you can't buy a true investment property with a VA loan, but you can do what we call house hacking. And so that's where you buy a multifamily property and you rent out 3 of the units or how many ever extra units you have, and you live in one of them. The VA loan has a minimum credit score. The VA loan doesn't have a minimum credit score, but each lender has individual lender overlays. So this is going to go for the credit score and also for your purchase limit. So right now, our highest lender has about $4 million is what you can do. The VA loan process takes forever. That's absolutely not true. It depends on the lender. We have lenders that can do VA loans in 12 days. There's a maximum loan amount. Again, we have lenders that can go up to $4 million. Who's eligible? So active duty, all of our military personnel, Air Force, Navy, Army, Marine Corps, Coast Guard, even the Space Force, I guess they count these days, are eligible for purchase after 90 days. So reservists are a little bit tricky. You have to serve for 6 years or be active under Title 10 or Title 32 for 30 continuous days for a combination of 90 days. And then veterans that are eligible with an honorable discharge or other than honorable and surviving spouses. So why should you use your VA loan? For one, I think it's one of the best loan programs out there because of the no down payment. There's nothing else out there like that. So this is a great tool that they've given to us as veterans. There's no private mortgage insurance. Yeah, there's other programs like FHA where you can get a lower down payment of 3.5, but you're going to have that private mortgage insurance that's going to add, a couple $100 to your payment every single month. The other thing is not only can you buy single family homes, but you can buy multifamily. So you can get duplexes, triplexes, and quads, which that's going to allow you to start to have other people pay your mortgage, which goes back to, when we played Monopoly as kids, you're wanting people to pay your rent for you. The other thing is you could do one-time construction loans, which is pretty cool, because most of the time the way a construction loan works is you purchase the land and you get the construction loan, and that's your financing for 12 to 24 months, and you're going to make payments on that. And then after that time's complete, you have to do a refinance into a new rate and a permanent loan. With a VA loan, you can cut all of that out and do it all at once. So that's kind of a cool thing that they allow you to do. So as we get into these house hacking methods, on the single family, there's two different methods you can do. So there's long-term renters and then there's Airbnbs. So most homes you purchase are 3 bedrooms, and most rooms on a long term are going to go from $500 to $1,000. So this example that we broke down is solely based on our market here in Colorado Springs. So here's a house for a $400,000 purchase. That's going to give us a pity payment of $2,617. Your pity is your principal, interest, taxes, and insurance. So in our area, rooms are renting for about $750 a month. So if you have 2 extra rooms, that give you about $1,500 monthly, which would only leave you with a remaining payment of $1,117. And then the Airbnb method, this is personally my favorite method, and especially in areas around military bases where a lot of you guys are looking at buying homes. They're high travel area. There's constant people in and out, and they need Airbnbs. So here in Colorado Springs, our average daily rent is $75 per room. So if you book your rooms up half the time a month at $75 a night, that's $1,125 per room. So if you can do that with both of your rooms, you make $2,250 a month, and your mortgage payment would only be $367. So I'm going to pass it over to Zach, and he'll start going over the multifamily techniques.
Perfect. Okay, so Josh really was able to kind of dive into the single family technique. Now, the single family technique is what a lot of people do depending on your situation. Personally, it's what I did when I was in the military. And it's a great starting point if you're just trying to reduce your monthly expense. That's the big thing that I want you guys to take away from that single family technique, because it's what most people start out with. The multifamily is a little bit more intricate because you're dealing with tenants, you're going to be a landlord, you're going to have a few more things, but it is a great technique to leverage your VA loan into doing this. And this is why we're here on how to really leverage our VA loan. So when we're looking at the multifamily residence technique, what we have for our principal, interest, taxes, and insurance payment, we're looking at $4,725. For the purchase price that we used for this, we used about a $700,000 house. So quite an expensive, quadplex, depending on your market. There are some markets you may be in that are much lower than this, but we just went with our market here in Colorado Springs. We're outside of Fort Carson, the Air Force Academy, and all that good stuff. So with our payment being $4,725, now we would be renting out this, or excuse me, purchasing a quadplex. So if we knew that we can get $1,400 for the other 3 units, that would bring in our cash flow of $4,200 a month. So if we're looking at our $4,200 a month net proceeds coming in, this is going to reduce our out-of-pocket expenses for our mortgage down to $525. Now, guys, gals, If you could find a place that is $525 to live, that's nice and yours, please let me know. But this is what I want you guys to think about this technique. A lot of people don't really, they get a little stressed out and confused, but we want to reduce your monthly outgoings. And this is the great way to do it, because if you were able to only have to spend $525 a month on a place to live, what could you do with the rest of your money? And that's what the mindset that I want y'all to be in. So again, when it comes to this multifamily technique, you need to occupy these properties as your primary residence. We don't want anybody getting in trouble for mortgage fraud. It is a huge thing that is investigated by the FBI after you purchase a home to make sure that you're not abusing your benefits. So let's keep this in mind. Primary residence. We cannot purchase an investment property with this, like we stated earlier in the presentation. So again, when we're looking at this, let's say you live there for a year, which is pretty much the requirement for the VA loan, unless we have extenuating circumstances. You're asking what are extenuating circumstances? Maybe you have to PCS and you need to leave somewhere sooner, because we know how the military loves to cut orders. Some days you know in advance, some days you don't. It really just depends. But when we're looking at this, let's say you occupied this quadplex on your own, right? Now that unit you lived in, you could flip to an investment property now. So with the 4 doors that you have, keeping that same cash flow with $1,400 per unit, you could make up to $5,600 a month on this property. But let's factor in our mortgage payment of $4,725 with what we're getting of that $5,600 will leave us with $875. So this is how you are able to really cash flow from a property after you've lived there for a little bit. The thing with these figures, right, we're not factoring additional expenses, because everybody, when it comes to purchasing, will have different expenses. Maybe you don't want to manage it yourself and you hire a property manager. That could be an expense. Maybe you want to upgrade it. That's an expense that we're not factoring in. So we're just keeping very baseline numbers for you, because some properties may need a little bit more TLC than others. It's very variable when it comes to purchasing a home. But this is showing you how you could turn that quadplex into a cash flowing property. Moving into, right, you're thinking, hey, I bought this one place for $700,000. That's it. What Josh went over in the beginning of this presentation is you can have more than VA loans at one time. I have more than one VA loan out right now, and this is how I did it. So when you're looking at the county loan limit for a quadplex, it's higher than a single family home. So what does this mean for you as a buyer? If the county loan limit is higher for a quadplex, you have more buying power with your VA loan when you're buying multiple properties. So for this example that I used, it's that same $700,000 house, minusing what I have left on my entitlement. So if I bought a $700,000 property and I wanted to buy another quadplex using the county loan limits I have here in Colorado, without putting any money down, I'd be right here at the 626, 552 mark. So what I want you guys to think of is I can buy one property for $700,000, no money down. And with my remaining bonus entitlement, I could buy another quadplex that is $626,000 in my same market, no money down. Now, this is really when you go into hacking your VA loan, because no other program is going to be allow you to stack up 8 doors potentially with no money down, right? Every other loan program out there has a down payment requirement. For FHA, we're going to dive into later, and conventional. But for VA, this is really how you guys get into how do I stack my properties with no money down. Leveraging this is a great tool, and I know this is a very kind of complex topic, but if you have a current property and you're trying to figure out how much entitlement you have remaining, the easiest way to do it is reach out to me or Josh, and we will show you how much entitlement you have. There's no credit check, no nothing. We just pull your certificate of eligibility and run it through this calculator, and it's the same numbers that we would give. So I know that's probably a lot. Does anybody have questions on bonus entitlement before moving forward? The quadplex technique or the single family residence technique? Okay. right, we'll go ahead. If you guys have questions on that, go ahead and just throw it in the chat and we'll be able to answer it. One of us will. But again, moving forward, a lot of people think once they move out of a home that they bought it with a VA loan, that they're going to have to refinance it into an investment property. You do not have to do this because you have already met your minimum living requirements in that home. So you have already occupied it as your primary residence. You can vacate it and keep that VA loan on there because, right, VA loan is going to have no mortgage insurance. It's going to have a lower interest rate, and it's just the bee's knees when it comes to loan programs. So you could keep house one under a VA loan and purchase another one, like I said, house two with the same VA loan benefits if you have enough remaining in time. The reason why I wouldn't refinance out of your VA loan if you don't have to is because conventional investment property rates are much higher than a primary residence rates, and that's going to decrease your cash flow. So keep in mind, you don't always have to refinance. If you are looking at refinancing, that's a more in-depth conversation that we could address later, but high level stuff, keep the VA loan on that property, maximize your ROI and cash flow, and keep moving on and stacking on your portfolio. Again, just saying that the VA loan has better rates, payments, all that stuff. So let's talk about what happens when you run out of the title. You've used all your VA loan benefits, you stacked up all these properties, and now here you are. You're wondering what to do next. Now, for this example, we used a little bit lower purchase price, but I want you guys to look at what could your net worth be in a house that's, maybe 375, 450, just keeping it back down on this low level. You could be worth almost $250,000 in 7 years just from owning a home, which I think is the best savings account that you could ever have as an average military person, right? We know the TSP is not bad, but it's not great. The pension's not bad, but it's not great. Owning property is how you could really build wealth to whether maybe you want to do 4 years and get out, or maybe you want to do 20 years. But this is really where your appreciation comes into play when it comes to owning a home. So you run out of entitlement, but now you have all this equity in whatever property you have to leverage other loan programs. So just because you used all your VA loan benefits does not exclude you from FHA loans, conventional loans, or investment loans. So let's keep this in mind. So going into how are you going to tap into that equity as a home buyer? So tapping into your equity, you have a few different options. The most common one that you're going to hear, and if we're being honest, is the cash out refinance due to mortgage professionals make more money off of this when they do a cash out refinance for you. So this is why if you're getting calls by Veterans United, I get a lot of calls from Freedom Mortgage because I have them. They're trying to have me tap into my equity. It is a whole different loan. You will be subject to new interest rates. So if you're at a 2.25, you're subject to today's current rates, which is why I do not like the cash out refinance right now in our market. The benefit of the cash out refinance is it is debt free. So if you pulled $100,000 equity out of your home, you will not be taxed on it. And this is the benefit of the cash out refinance in a better market when it comes to interest rates. The other option you're going to hear a lot of is a home equity line of credit. These are great, but they can be dangerous. And what I mean by dangerous is if you overextend yourself, because this is like a credit card on your home, you could put yourself in a worse buying situation. But the goal with the HELOC is to pull out that line of credit, put it on a new property, and then let that property cash flow for you and gain appreciation. The third one, of course, is selling a property. Selling a property, I mean, the big things are, did you live there long enough to avoid capital gains tax? It requires 2 out of 5 years to not be hit with that tax. Now, some people don't always have that situation, so I don't really like selling a property. Some people me and Josh have ran across is they try to get people to sell a house when they're underwater on it instead of renting it out. So I'm a little biased on should you sell a house. That's a case-by-case basis, and some people just don't want to manage a house. A 1031 exchange is if you have a lot of equity in a home and you don't want to get hit with taxes by selling. This is a very high-level tactic, and the 1031 exchange is great, But I would say if you are looking at doing this, we really need to have a consultation because there's so much that goes into it. It is not like purchasing a regular home. It just requires a few more steps, but great programs right here to get through. And these are the basic ways to pull equity out of your home. Now, we talked about, hey, you have all this equity, you ran out of your VA entitlement. What other programs are available to you? And I know I kind of started harping on some of them, but let's really dive into these because where veterans get caught up on is they think that they can't use these kind of products. They think that this is only for civilians, they think it's not for them, or they think that it is for first-time home buyers. Well, that's just not the case, right? So starting out, the FHA loan is probably the most common loan that you will hear about when it comes to purchasing not only a single family, but multifamily properties. You're probably wondering, why is this so talked about in the realm of real estate? And it is because you could purchase a quadplex, a 4-unit property with only 3.5% down, making it a very enticing program for people to jump to. And it is great. It is honestly it's our lowest down payment program other than your VA loan benefits. So I do like this program. Again, 1 to 4 units, 3.5% down, and you do not need to be a first-time home buyer to leverage an FHA loan. Okay, so if you maxed out all that VA benefits that you have, you can go and acquire an FHA loan to purchase whatever property that you are looking at. Keep in mind, you're going to have mortgage insurance, you're going to have a down payment, and they're a little bit stricter on their underwriting, but it's not terrible, guys. If you have good credit, you pay your bills on time, any loan is easy to get through. Where people get hemmed up on is they don't pay their bills on time, their credit sucks, and then they get mad at me when I tell them. Moving on to a conventional loan. So big news with the conventional loan. Up until this past November in 2023, if you wanted to purchase a multifamily with conventional, the minimum down payment starting was 15% for a duplex and then 25% for a triplex, or quadplex. This just changed within the past few months to where now you only have to put 5% down on a multifamily property when it comes to a conventional loan. So you're probably like, okay, what does that mean? You can leverage an FHA loan and maximize those benefits, and then you can jump over to a conventional loan and do the same thing. These programs do not require you to be a first-time home buyer. Keep in mind, sorry about that. Conventional loan is a great product. Now, conventional loan, the big difference between FHA and conventional, FHA will always have mortgage insurance on it for the entire life of the loan. It is a government-backed loan. Those are the requirements. Conventional, on the other hand, you will start out with mortgage insurance if you only put 5% down. But if you pay off 20% of your principal or your house appreciates by 20%, that mortgage insurance will fall off, which is what has a lot of people enticed to use conventional loans when they can. Moving on to our last piece of what could you really leverage is the investor specific loans. So we have, what I'm really going to highlight is our DSCR loans. And the reason being is you can only have 10 finance properties according to Fannie Mae and Freddie Mac. The DSCR gets around this regulation. So if you have, let's say, right, we showed you how to scale 8 doors with your VA loan, then you maxed out maybe a duplex with FHA, you're stuck and you can no longer use conventional financing. DSCR is what we call a non-qualified mortgage because it is not sold on the secondary market to either Fannie Mae or Freddie Mac. So this is essentially investors giving you money for this loan. I don't want to say it's hard money, but it is a term of, it's kind of private financing. Now, they do require, you're going to start out at a 20% down payment, and this is perfect for multifamilies. You can go up to 8 units. I have seen some DSCR programs that offer 12 units. So if you're that guy or gal that really wants to get into those high unit apartment complexes, DSCR loans are the option for that. The other program that we do have when it comes into these investor specific loans is called the bank statement program. These are perfect for self-employed folks that want a second home or a investment home, and they have very cash heavy assets because we are just going to average out 12 to 24 months of bank statements, and that is your income used. Because if you are somebody that is self-employed and you really get into the entrepreneurship world, you are going to have a lot of deductions, which is going to decrease your taxable income. But when you're looking at conventional financing, it looks like you don't make money on paper, and investors don't like that. These programs are a way around that. They don't want your taxes. They don't want your pay stubs. All they want to know is, do you have liquid assets in the bank statement, or with the DSCR, do you have enough money down, and does that property cash flow? So it's two a little bit different programs out there, but these are both great tools, after you've leveraged all your benefits, all the minimum down payment programs to step in. Because if you can get 12 doors with as little money down, now you have all this equity to scale with. Hey, maybe you want that 8plex, that 12plex, 10plex. You have that equity to do that, leveraging these different programs. Here is our QR code. If you guys want to take a quick scan of it, leave it up for just a sec. Stand by. Yep, if you guys want to take a quick picture of that, go ahead. If not, we could always put it up back at the end. We will have a Q&A session at the end of this. And then we are not done yet. So, hey, just hold your horses, take the picture. We still have a little bit more to go through. Nestor has some more information to give to you guys. So please just give it a second. I'll let Nestor continue though. And then if you guys need that QR code, we will pop it back up along with Nestor's contact information as well. So go ahead, Nestor, you can skip over to the next slide for you.
Sounds good. Thank you. Technical difficulties, you guys saw the slide already, but let's see what's going on. Okay, yeah. So here we are. Back to the community, GRI University community. I'm big on community, and thank you, Josh and Zach, for that education that was filled with a lot of information there. But back to GRI University, wanted to give you just a little bit more insight and a little bit more to-do steps if you want to get involved of this opportunity. This was after deployment, and I'm big on community, like I said, and I've spent hundreds of thousands of dollars throughout the years myself. Not hundreds of thousands, a lot of money, maybe not 100,000, but close to 6 figures plus in self-education and mentorship from people that I want to, entrepreneurs in the space that have what I want and have been where I am. So I'm big on mentorship and I'm big on community. It'll help you quantum leap and it'll help you learn from mistakes. So that's the purpose of GRI University, is to learn from my mistakes and to quantum leap in your business and in your life. So I hope you guys can be a part of it. And here's a little bit of the last couple of clients I've worked with and some of their results in different industries. I'm here to provide veterans with tools and resources, again, and investment vehicle opportunities in education, such as the VA home loan hack that we did. And we're going to have different educators on here. But today's conversation was about VA home loan, and I hope you guys utilize Zach and Josh when it comes to your VA home loan. So I told you guys I had something very special for you guys at the end of the call, and here it is. So for the webinar attendees, I have a very special discount for you guys attending and taking the time to learn with us tonight. So it's $500 deducted from the original price and joining GRI University. And this offer is going to be valid until March 1st. So if you want to get in contact with me, this is my information. My QR code to my calendar is on the bottom right. So you can also take a screenshot, and I hope to hear from you guys soon. So now we'll open up the floor to some Q&As, and feel free to ask away.
If you guys want to ask a question, just use type Q in the chat box and we'll unmute you.
Is this supposed to go to the next slide now?
Yep, that's it. That should be our final one.
It was open to Q&A, but that's okay, no problem. Either way, if you guys have questions, feel free to drop a Q in the chat and we can answer. We'll stay on for a couple of minutes to answer some questions. I need to start getting some more VA loans and start stacking my portfolio myself. So I'll
It's
definitely be hitting you guys up.
yeah, it's definitely the way to do it. I mean, right? We earn the benefit depending. Like, I don't care if you did 3 years or 30, right? Everyone has the same benefit. Um, and how do you really build wealth? Because let's face it, my goal with this was to, if I stayed in, right, my personal goal with this was, how do I have at least right, five houses by the time I hit 20 years in the military? Because the
Yeah.
way that I viewed it, if I could have every house cash flowing, let's say $750 a month, and I have 5 homes doing that. Well, now with my pension, because I was probably only going to hit E7. Maybe somebody got a little bit of trouble in Germany, whatever. That's neither here nor there. But I viewed it as, okay, if I'm getting a pension of, let's say, $2,500 plus all these other properties are giving me $700 a month, roughly 750. I mean, that alone is almost $5,000. We're not talking about our disability, because if you do 20, you should get 100. Like, non-negotiable is what I think. If you didn't get 100, it's because you didn't go to sick call, and you should go to sick call to get your disability. I mean, let's face it, right? Everyone, like, that whole bravado stuff is cool, but then when you're broken and you're trying to get a VA claim, people don't care if you didn't document it. So my goal with this was, right, how do you retire and have 5 properties cash flow? And let's say, hey, I don't want cash flow on these properties. I just want to hit 20 and sell them all. Well, if you guys think about that chart I posted, right, after owning an average home of $400,000 of 7 years, you'd be worth $250,000. So if you had 5 homes, each that had gained $250,000 of appreciation, of course, that's not always the case. I mean, you could sell all those homes and retire with $1 million.
Absolutely. Absolutely. The strategy is solid. And everyone on this call should definitely participate in utilizing their VA loan, whether to be their primary residence or to create them cash flow. So again, thank you, Josh and Zach, for the breakdown. And if anybody has any questions, again, we'll stay on for about another 5 minutes. But the webinar was great. I hope you guys enjoyed the education as much as I have. And
and Greeley.
Really super nice.
Yeah, it is.
Where's Greenlee at?
Like west of Denver, right?
Yeah.
Oh, okay. Nice. Very nice. But yeah, my program, just for the people that are still on, my program helps that foundation and the baseline. So if you decide that you need funding and you're interested in doing a quadplex, I can optimize your credit profiles, get you that funding, and put you in a position to get the quadplex. That's an investment vehicle that you can put funding into. And again, we can get you a lot of funding up to $150,000 with no document, no statements, up to $3 million if the paperwork trail is correct. But nonetheless, the funding shouldn't be an issue if we optimize the credit right and put that money to use and make that money go to work for you. That's the name of the game. Have money work for you.
And once you're ready to move over to DSCR style loans, that's something that you can do with Nestors, 150,000 of funding as well. You could use that as the 20% down payments for these DSCR loans up to 12 units and cash flow on those properties.
It is. That's the name of the game. Cash flow. Awesome. We got some great feedback. So if nobody has questions, we can conclude the webinar.
Yep. So that's it.
If anybody anything bigger than 12 units, you have a go commercial. That's you guys.
Yeah, we've got options. You can do private financing. You could get an equity partner. There's a few different options. That would be something we kind of have to set up a phone call about, and we could deep dive into that for you.
That'll be a case by case basis, right? What's the complex like? What's the units are like? What really is going into it? You could potentially use a DSCR loan, or it may be commercial. It really just depends when you go into those kind of properties. It will be case by case, and any investor is going to tell you that. What's the property like? Send me the details, send me everything like that. Because commercial loans, at the end of the day, are going to use the DSCR method, which is debt service coverage ratio. That's just a fancy way of saying, is the money coming in paying your mortgage? That's all it's equaling out to. So when we're looking at that, the commercial loans are going to use a DSCR method as well. It just may be a little bit stricter on underwriting, down payment. It's a whole nother world. Once you start going above, I would say about the 10 unit mark, 8 unit mark, it's a little bit different when it comes to your financing requirements.
Mm-hmm.
And with that, I mean, personally, I'd rather do equity partners, and that way you're not risking it all yourself, and you're not coming out of pocket for down payments and things like that.
Exactly.
That's true. Very nice.
Oh, sweet.
Sweet
Well,
deal.
everybody, that is if we have
Yeah,
no
that's
other
a wrap.
questions, that's all we got.
Appreciate you guys coming on. Zach, if you could do the honor and shutting down the webinar, and I'll see
Absolutely.
you on the next one, brother.